There's another question. A toy manufacturer with 12% cost of capital plan to expand its current operations by adding one more production line to its plant. Now, this expansion will require the company to invest in additional equipment to either purchase and pay 8,000 upfront in lump sum. So that's option one, or undertake a 5-year lease that will require annual payments of 1,850. The company uses straight line depreciation for tax reporting and has a marginal tax rate of 30%. The present value factor for 5 years is 0.567 and the present value annuity factor is 5 years for 3.605. So now the question says, assuming the company chooses to lease, it will be recorded as an operating lease. Should the company pay upfront or lease the equipment? So if we look into the solution of that, there are two options. The first option is to pay in lump sum 8,000. The second option is to pay as annual lease payments of 1,850. Now, what is the decision? Decision would be about, should it be paid as upfront amount as one lump sum amount of 8,000 or lease payment? So the question is not asking us to choose between the options, because anyway it says that it would go with the lease payments. Now the lease would be considered as operating lease. Of course, I think you understand what are the conditions for a lease to be considered as operating lease. After that, so that would be the entire amount would be expensed as an operating lease. So when we check the question is simple in terms of finding out what is the present value of these two options, because the first option, the entire amount is paid as on today, so it would be 8,000 as it is for the present value. Now for the option 2, it is 1,850 annual payments into paid for 5 years at 12%. So there are two options given. There are two calculated table values given. One is for the present value factor for 0.5 for 5 years is 0.567, and the annuity value is 3.605. Which one to select? So I think you have that clarity that since it is annual payment, so it would go with the annuity value. So take 1,850 into 3.605, which is 6,669. Now the question has the answers given as, assuming that the company chooses to lease, it will be recorded. Should the company pay upfront or lease the equipment? So we understand the present value of lease is lesser, but it is, the answers do not have it as choose option 1, choose option 2 in that manner. See, the options given are on a comparative basis. So it says that the company should purchase and pay upfront, it will save something. So when it is a comparative note, on a comparative note, just find out what's the difference. So the difference between these two, so that will be 1,331. So the option